All right, people, welcome on board. Let's go. What's up, Abs? Abs, I saw your message, bro. What'd you call it? Well, let's catch up afterwards, yeah? Good to see you on. Sorry that I wasn't on live yesterday, guys. Basically, you know, there are multiple aspects to the Wealth Group Academy, and we have our developers section. You guys have made me smile to see you on already so soon. So I've been busy with the Developers Academy and Developers School, working with our budding backend developers in our backend developers pathway course. So I got busy yesterday, guys, and I couldn't come on the live, but I'm here, I'm on it. Let's go. Let's not waste time. I'm gonna crack on. Lovely to see you, people. Really lovely to see you. It's made me smile straight away. All right, let's crack on. I'm going to start with the dollar index first, and then I'll come back to where we are. So I have different schematics that I've made. This one, I don't really like it too much because it's just too messy. So I'm going to delete that. And guys, let me know. Do you prefer me to use MetaTrader or TradingView? Because I'm pretty old school. I know that a lot of people do use TradingView, but if you want me to start using TradingView instead of MetaTrader, let me know now, and I don't mind switching over to TradingView instead to mark out these same price points. Check in the comments and see. What do you guys say? Should I stick to MetaTrader or should I go over to TradingView? All right. Well, okay. I ain't heard from you yet, so I'm guessing I'm gonna stick to MetaTrader for now. If you want me to go to TradingView, you know what? All right, no problem. What I'll do then, I'll do TradingView today instead of MetaTrader, make it a bit different, since that will be, if that's what you guys would like. Let me just open up TradingView. MT4 is cleaner, just had another look. Okay, MT4. Okay, I'll stick on MT4 then, no problem. Okay, cool. It has another look, no problem. I'll stick to it. All right, so with the dollar index then, guys, let's crack on. So what I'm gonna do, I'm trying to close all the dollar index charts and just leave this one. Now, this is our schematic for, I would say, the current range of where we're operating from. Okay. So right over here, remember, as I said, that we have this order block here, which is of attention to me right now. So let's look back a little bit here. So we have what I call a validation point over here. The price came back to this price point here. All right, or reuse this price reference point if you want to put it this way. We had a strong short down. We've had the wick of the candle close beneath the previous week here. And this is the week starting the 16th or the 19th, actually. Once that happened, we had a break of market structure right here. Now, in this situation, in theory, this candle should be the order block that we should look at. Now, within the Wealth Group Academy, we put this the principal order block, but in this case, I'm using the entire range right here, these three candles. Now, this second candle here kind of slightly throws off the dynamic here because it's actually a bullish candle and it should be a bearish one. But we did see price wick down here. And even if we didn't use this area, we have this small little range here that has demand, that the market, even though it cut through it, still kind of stayed, the body of the candle stayed above it and obviously took off long. Now, tracing price a little bit further because it's been a little day since I haven't been on. We see the price swing into this high right here. Once it does that, we have a sharp drop down short, right? And you can see that in this span of candles. Now, when I'm analyzing, I do look at candle speed and time because whenever it comes to price delivery mechanisms, guys, the price has two aspects to it. It has the time and it also has the price. And time and price, or time and amount, can show you speed as well, okay? And distance and things of that nature. So if we look at from this H4 candle here until the price got to this order block, it took us 1, 2, 3, 4, 5, 6 candles. So that's about 24 hours basically. In terms of 4 times 6 is 24. And within the next H4 session, okay, this is one H4 candle. The price was able to close beneath many of the opens and closes of at least these candles here. All right. It didn't manage to close beneath the open of this candle here, but it did get very close to it. And this is within 4 hours. So seeing such speed like that and a reaction lets you know that there's some sort of bullishness that has been taken away out of the market and bearishness has come in, right? Now, again, if you want to know my bias, for me, my bias for the midterm is that the dollar index will gain a massive amount of strength. As inflation continues to persist, which is from a macroeconomical standpoint, the dollar would increase in strength in the form of quantitative tapering, which is currently taking place right now with open market operations. And I will go through these things in more detail. I think I'm going to make some dedicated videos to looking at fundamentals, even though technicals is where I've spent 99% of my time. There is a small part of fundamentals that is good to have a look at and understand, okay? But anyway, moving forward from here, we see the first candle here. The price came back to this reference point over here on the H4 low, then pushed back down. And we see the price wick lower and run these lows. So the sell stops that were beneath this low have been triggered most likely, and any stop losses too were triggered. The price makes a way up now and has made a second leg here, and it's pushed straight back down as soon as it comes into this order block. And even though the candle is small here, observe this order block. Now, you could actually use these two candles to represent supply if you want to. Now, one of the things some of my coaches do is to just use this order block here, body, to kind of represent things as well. But you can see right here, the price is just about inside of this range, okay, at the edge of the candle. But we see the price has been pushed all the way back down to this area. Second thing to know is that there is a situation here where the higher low formation has a bit been broken here. So if I start from here, I know I have a lot of markings, and if there's anything that's confusing, please let me know. But we've got this high here, swing high over here. But then when the price comes lower here, even though the body didn't close beneath the low, we did get a lower swing low printed out here. So my thing is that I want to see how the price is going to respect this order block. If it closes beneath here, if we get a H4 close beneath here, we should be looking for a bearish dollar temporarily and then a bullish dollar after. Now, interestingly enough, this is the week of the NFP results, which will come out tomorrow at 1:30 p.m. UK time. Now, that piece of news, of course, is going to cause a lot of noise in the market, and we're going to have a look to see where most likely the price will go. So keeping that H4 analysis in mind, let's observe what the price has done today and kind of figure out what we've got going on. So I'm going to keep the H4 order block here. Let me zoom in a bit. This is the H4 supply order block in this range right here that we're working with at the moment. And I'm going to keep this range here. I'm going to delete that, delete this. And I'm just going to keep a few bear markings that are important to understand for the analysis here. So delete all of this as well. Okay, so now that we have all of this, let's go down to the H1 and just do some high and low price action analysis. So what triggered the price today? Well, we had some news come out, which was the ADP results. And by the way, the ADP is extremely bullish. If I just show you here, and I was to share my screen, if I go over here and I share the screen on Zoom, let me do this. All right, so if we go here, ADP on Zoom, switching over, yeah, here we go. So if you look over here, the ADP results came out to be double what was the consensus. Is actually more than double, which is absolutely crazy. So the employment change for July has gone from 228 consensus to 497K. Now, with an extremely bullish result like this, I haven't seen this kind of bullishness for a very long time. And as a result of this print that's come out, it is highly possible that the NFPs tomorrow, Friday, basically, would at 1:30 UK time will be bullish as well. Now, the ADP, which is the American Payroll Department, they manage about 60% of all of the payrolls that come into the country. Now, non-farm payrolls, which means, minus farming, the farming sector here, because the rules are different. All right, it may reduce the numbers down a little bit, but even then, this is a highly bullish result. So I'm not saying here that we shouldn't pay attention. We should just completely hang on to this super bullishness, but this is the reason why the price has gone extremely long. Now, if we marry the timing of this with technical analysis really quickly, and I'll come back to this news in a moment here. If we marry this with technical analysis, let's look at what happened. Now, before the news, then this is why I say that I spend 99% of my time on technical analysis. Right over here, we had a very textbook price action movement here, which is that we've seen that the price has formed the manipulation bar or a bull trap at the end of this trend, which is a signification that the price would like to change direction. Okay. We see price pushing down in the first leg in Asia in terms of UK time. We see this spike back here. Now, this spike back here is key in understanding price delivery mechanism. What's going on here? Well, what we had is that after price broke market structure right here, this is the moment that we had a break of market structure. Now, in fact, to be fair, within the academy, we actually teach to look for a swing low before the price took a high or a low. Reason being is because in terms of significance, you would see the price react. There's a lot more significance in a previous trend from a previous day, in this case, being broken than just on the same moment. Because to be fair, the price is already above the high at this point. So this swing low is not the most relevant or critical. All right. But a break beneath here, if I was to draw a line across, you can see that this area here becomes a reference point. The next supply liquidity that comes into the market is referenced or based on this swing low here. The supply zone order block that continues the trend actually forms right here. So this is why you would want to use a swing low from beforehand rather than here. So continuing on with the analysis anyway, we have the initial supply order block break of structure. And this spike right here for price to grab liquidity into the supply zone and begin the short. The first leg happens within the UK session. Then we see a continuance down into the US session. Now, where's the market gunning for? It's gunning for these lows right here, and specifically this one. So now that the price took the low, let's look at the time. So if we look at the time right here, the time is within this candle, 2 o'clock market time, which means 12 o'clock UK time. So an hour before the price actually did this movement, the price had already taken the low. And for those of you who've been my students on the live would have known that we should be looking for a long as soon as there's a break of market structure on a lower time frame. Now, the thing is, though, when the price took the low here, it would have, this is the initial news right here. The price would have broken structure from this point on, okay, or from this swing low on here. Now, unfortunately, the only way you would have known if the market was going to do this is that you would have had to be on quite a low time frame for you to see this. And you would have had to give the price the chance to either just get in. Now, for our students, you would have known that as soon as you see this, which is what we will call a sell order aggregate, as soon as you see this and the price takes the low, then you can actually jump in straight for a long, because after the price does this on the M1 here, as soon as the price gets down here, then you know you can look for a long and you'll be in your way in. Now, we don't trade the dollar index per se, but you would have known it from this sell order aggregate that there would be a long that happens. Now, does this mean that the dollar index is going to continue going long now? We'll have to wait and see, okay? But what I would say definitely is that we do have very strong price action here that denotes to, the price moving forward for possibly a long, all right? Now, on the H1 here, I just want to make a few observations. So we have the bull trap over here. So the intention is to trap bull traders. Prices come beneath the low. But if the market decides to go long, which is another option, the next place it'll go for is above these highs right here. Now, because of how the price action has gone today, I think one of the keynotes that we can probably tell if price would like to continue long is if it closes above this supply order block. So again, looking at our reference point to the left, we have this swing low, which the market algorithm has used as a reference point for time and price. If you see today, guys, and we have about 7 hours left in market time until the market, breaks above. And we do have news coming out at 3 o'clock, so we're going to know. This is why the spread has increased. If this news is able to cause the price to break past this supply order block and we get a body closure, the next thing you want to look out for would be here. All right. So we need kind of like two confirmations. The PMI, the news that's just come out on the dollar is important US news. It comes out at 3 o'clock UK time. And that's why the market has kind of put up like this. And this is why I made sure I do the live just beforehand. If we get a body close above here, guys, then the next thing to look for would be a body close above here. If we get these two closes between today, then the expectation should be that we're going to continue long. All right. However, if the market comes back down here, and let's say, I'll just use this as a reference, the price comes into this order block and it closes below 50% of this order block here and starts to close near the edge of it, then you should be expecting the price to break down. Now, it doesn't always happen. Sometimes an order block, the price may close more than 50% and still go long. Okay, it's very dependent on other factors that are going on. Now, in terms of highs and lows, let's look at this. So we have a daily low here because this one has already been taken. We have one here. Now, I'm not introducing these into the equation because if I was to draw a line across here, with this wick price action, it actually took these two lows already. So we wouldn't be looking at those lows for anything significant again. Because definitely if there was sell stops beneath there, they most likely have been triggered. And if there were stop losses, they've definitely been run. So we have, at the moment, ignoring here, we have three lows that are left behind on the downside. On the upper side, we have one low here. And this is within the 5-day kind of range or weekly range. We have one low here, one high here, and another high over here. So these two highs right over here, right? These two highs are enough for the market to run past these highs and grab some liquidity, or run beneath these lows and take liquidity. So we have a range that we can operate with. And I believe the price will stay within this kind of range of this trend. We're still kind of internal right now in that regards, that in terms of the bullish to bearish trend, this is kind of like the range of operation, okay, that we're in. From the bearish side, if I was to take the highest swing to the lowest swing here, and this is where I want to add the premium discount price action here, all right, the current price action or the current area the price is working with within this small trend here. The reason why I'm using this, by the way, if you're not too sure, okay, and I just want to make sure if there's no comments at all. Okay, no comments, but just to help you remember what's going on here, the reason why I'm using this is because in this range that we're working with from the 29th until now, in essence, the weekly range that we're dealing with right now, including this Friday massive move, so the last massive move, I'm taking the top to the bottom here from the bearish side of things. And once I do that, then you'll see that the fair market value for this area is right where the price is kind of hovering around. Currently, it's above it, around 62. All right. When the price spiked over here, this was an optimal trade entry move, OTE. Now we're at 62 with a supply order block. So if the body of the candle is able to close above this supply zone, which we could know by today, pretty soon, then there will be a good indication that we should be careful of looking for the bearish side of this market right now, because the price would have closed pretty far above equilibrium. At the moment, with this candle here, because it's wicked up and down and the body is not that big, it's not really that significant. But if we do get a close beneath here, based on this range, then that means we'll be going for the bearish side of the market. However, if the price starts to close above this body and close above this body, today, especially if it is today, then my suggestion would be that we should look for the price to continue long. Okay, now the NFP news will definitely cause spikes, because I want to share a secret with you. Institutions do not trade the news. What they usually do, they don't enter positions with the news. They usually use it as exit liquidity because there's so much volatility going on. So you'll find that with news, it will spike to a seemingly random area and then reverse the other way. When that happens is because we have intelligent money using the opportunity of the news to get out of positions, okay? So the price will spike to high and lows, sometimes long-standing high and lows, because they can use the opportunity to drive price there. Let's say if they have some sell orders going on and they're up here. Well, if the NFP news spike down short first before going long, when it spikes down short, it will close out their they will close out their positions here if they were buying, or whatever, if they were buying or if they were selling and they were doing counterparty. But let's just say they're selling, all right? The people who have sell stops beneath the low, they can sell their positions to them at a premium price, and they can come out of their positions while you're stuck in that position on the wrong side of the market. So this is where high impact news plays a part, okay? Same thing with the buy side. If the price spikes above these highs, it will trigger buy stops that are above these highs, and smart money can offload their buys to these people up here at a premium price, okay, because it will be above the 50% level by a long shot, and then the price will start to reverse. So this is the way that the market works. So don't trade the NFPs in that way. Now you can scalp the NFPs. There are strategies that can work, like straddling, but the market has become, the algorithm of the market, to be more specific, has become more intelligent, which means that sometimes I've seen the market spike long and short. And I know it's purposefully done to make sure anyone that put a buy stop and a sell stop on either side of the market will be stopped out twice over. Okay. And that's the key here. Now, at the moment, currently, you can see the price is pushing pretty strongly long. So be prepared for, you know, some bullishness to come into the market. All right. That's why I can say to you. All right. So now that we've gone through this, all right. In my opinion, in terms of daily highs, there's 2 daily highs on the upside, but there's 1, 2, 3 daily lows on the downside at the moment. So in terms of which one will have more money that the market can go for, it will be the lows. The lows have a lot more liquidity than in terms of two highs versus 3 lows. I'll go, if I was a market maker, I'll choose where there's more money and choose the direction of the short side, which is why I think that the price may actually go short. Okay. Now that we have this in mind, let's look at actual pairs and see what's going on. Now, our H4, H1 cross reference here, zoom out a bit. I'm going to take this here and put this back where it was. Now, have you guys seen that? Look, when the news came out, Euro USD immediately took the low of last week, which is what I was expecting. And we've had pretty much a strong reaction, and now the price is pulling back down. Now, it looks like the price has been suppressed here because we have near perfect trend line activity. The price is forming an invisible trend line that a lot of traders will be looking at. And for that reason, there's an aggregation of sell liquidity here, which I do think the market will break through and do along with. Now, if the price actually does this, this would mean that Euro USD would have to go for a long, and that means the dollar index will go short because the euro will gain strength. Now, the price is coming up with ferocious speed back to this area, and it looks like it might be creating a moment of re-entry to actually go for another buy. We'll see very soon. Might be taking some live trades, who knows? Okay. But this is really what we've got going on here. Pound USD, you can see that the price has pushed long and immediately pulled back short. And this week, one of the reasons why I haven't traded much is because, first of all, the trade I had, I was actually right about the direction, and the market only pushed a little bit higher and then dropped by 100 pips. Pretty annoying. I was on AUD JPY for the short. Pretty good trade. Now, if I look at Pound USD anyway, back to what we're looking at, the price pushed up to this long for a purpose. If you look at this perfect movement here, the market has just come for the high of last week. All right. Now, above the high of last week, what would we have above those highs? Buy stops, right? So right now, the market took advantage of the news at 115. Let's be more specific of who they are. Intelligent Money took advantage of the news and run the price up where to? The weekly high. Because above here would definitely be some good buy stops and some stop losses. So right now they've offloaded their buys and the market is pulling back down with such strong a vengeance. You know, is this whole entire move that we just had during the day has been completely taken back by the market. Now, the way you would have known if the market was actually trying to go for a long and continue or not is observing the daily lows. If you look at these daily lows, we have relative equal lows. So the market took off without taking the lows and then went long, which means that this movement here is a great movement on the long, but this movement here was definitely designed to be run after. And now that the price is going for a low, I definitely expect it to push beneath these lows and probably even take the low of the previous day. All right. So this is some of the ways that you can capture the market and see, you know, intelligent money price action moving or intelligent algorithms at work. Okay. The reason why price is moving up and down all the time is because it's looking for liquidity. Don't worry about volume too much because that's not nowhere near as important as liquidity. All right. And so this movement here was exactly the reason why Pound USD is moving short. So I want to see what's going to happen. We have a liquidity void and we actually have a fair market value gap between this area here, because in price delivery, we haven't had the price return to offer sell side prices here. So there's a little gap here that the price is most likely going to fill. And because this candle is a liquidity void anyway, the price should be pulling back down for a short. Now, my expectations for pound USD was actually back down here. So the price may be onto something here for this short. Now, please pay attention to this. So what my thoughts are, okay, if you're wondering about what I think about the NFPs and stuff, ideally, what I would say is that if the price takes some more daily lows, we may see something where the price actually may go for a long first and then a short after, because at the moment, as the market has come in to do this movement here, we haven't broke structure here based on a 30-minute time frame, for example. We actually haven't broke structure. Now we've broken here, we've closed beneath here, but now we've left a fair market value gap between this high and this high. So there's a fair market value gap that the market can go for. But we actually haven't broken structure either. The first swing low that is available that could bring any sort of clarity of, break of market structure would be here. This swing low over here, this will be the first point where the market can break structure and actually show us a sign of strength of direction. My thing is though, I'm more convinced that the market will probably take these lows as well and break structure in that way. So the NFPs might end up doing the opposite way. It pushes for a long and then goes for a short. Maybe it doesn't, but that's just my thoughts on that. Okay. If it doesn't do that, then we're going straight down for a short. But this is why I'm saying to you that the dollar index is something to watch. And you can see, look at this, guys. Just coming back for a second, the dollar index has actually come all the way back up to this supply zone again. All right, very strong candle. And if it closes above these two in that one candle, then, we may actually have a push long or weekly high stop on, who knows? The market may actually come for this weekly high. And if it does, it wouldn't be bad either, because above these highs will definitely be buy stops for sure. And that could cause a trigger to go short. So let's see what happens here. It's a very interesting market at the moment, and I'm not surprised the market, pushed up the way it has. All right, next, what do we have going on? Now, gold, we've been through it extensively, and I went through the 5-minute entry over here. If you remember, the 5-minute entry is this one over here. Let me go back to the 15. Do I have it? Yeah, I have the 5-minute entry. So the 5-minute entry was based on this supply order block here. The price broke above it, flipped it, used this area to go for a long. All right. Now let's see what's happened with gold so far. Now with gold has done a pretty brilliant move. And now that there's correlation between US dollar pairs, it helps for us to see correlation, moving forward. So what I'm going to do is take off these lines and expose gold for you. In fact, okay, I don't want to delete everything because that would be not good. So let's just take this off. So if you look at gold, if we're looking at US dollar kind of pair correlation, we can actually look at what's happened with gold. Gold right now has taken the high of the previous week. These two highs here were relative equal highs. We've had a spike here, initial break of market structure, beneath the swing low here on the H4. And then we see the price with some sort of news, I'm not too sure which one, spike back here, literally textbook price action into this H4 order block. All right. Closing about 50% of the way of this order block before the price crashed down to where it is. So this is a perfect scenario for a sell. All right. Now, with this in mind, weekly stop on, we have the same exact thing happening with pound USD. You can see the correlation here that pound USD is also taking a weekly high. And what that means is that we've had incoming weak strength or weakness in the dollar first. And now we have bullish strength coming to the dollar because pound USD and gold are going short. Remember, if XUSD pairs go short, it means that the dollar's gaining strength. All right. If they go long, the dollar's losing strength. Okay. And I always do this intermarket analysis because the dollar index is a very important part of our view. Now, gold has fallen into a very important and significant area. And just because it's got down to this area, it doesn't mean the price is going to go short. But for me, guys, what I'll say with gold, for us to really know, because last time I told you guys that gold wasn't ready to go for a short. And if we look at what we've had here, let me just take this area off and put this on. If we look at what we've had here, look at this demand zone here. The price is wick beneath the low. But when the actual news came out, the body of the candle for that day was very low or very far beneath this order block. At the moment, what's keeping the price above going any shorter and starting to fill the liquidity gap that's down here, which will eventually be filled anyway, is this order block. So my suggestion to you guys is that we need to watch how gold operates today. If we see a body close beneath this demand zone, the body, even if it's just an inch, If the body of the candle closes beneath this demand zone, then we should be prepared for gold to continue in a very strong short, which will fill this liquidity gap and this liquidity void and probably take these lows here. All right, so I wouldn't be surprised if that happens, but we have to wait for the candle close, because at the same time, the market may decide that I want to actually go for a long, because on the other side, there is a fair value gap on the market at $2,000, which is also a psychological level too, which I want us to be aware of. All right, so how the dollar index behaves and how the related commodities and forex markets behave will let us know what to do. Because on the other side of the story, gold is actually inside of an order block, which would have been a great entry from the H1 view. It's come back and filled out this liquidity void, and it's inside of this demand order block here. All right. Now, if we look at where the demand liquidity is derived from, this is the initial stop hunt. The price came back to the 62 point on the 5-minute. It formed another order block here, but in the initial run, the price just kind of rallied up without any pullbacks. Now, the news has landed it back into this order block here, and it's also fulfilled this inefficiency of, imbalanced supply and demand. So now the question is that where gold is it going to continue short, or is it going to go for a long? We had a wick here to go to this liquidity gap, and now the price has done this. We definitely want to watch out, because this actually may be an entry for a long itself. There's still a liquidity gap down here, which is why I haven't reacted to it yet. I want to see what happens when the price gets into this gap. Does it start to go long? Does it go for these smaller, lower down equal highs? Because we do have a few, like example here. We've got equal highs over here. We have a few kind of gaps going along to the left. So we'll go fill those out. We also have a gap over here, which if you look at where the market is come, pip for pip inside of that area. So I would like to see, even though it's the beginning of the week, because of what news we have today, it's kind of still like early days in a funny way. All right. So my view for gold is that for us to know what we're doing with gold, we're going to need to wait and see how the price closes today. Now, if you want to take the punt to try and go for the long to kind of grab back some of that liquidity, you can go for it, because maybe the price may come back here a second time. Who knows? With the NFP news as a wick, not the body anyway. It's more easier to know what the body and wick will do after the closure. But just from estimation, if we get a body close beneath this daily low, then we should look to continue going for a short. If not, then we may actually end up having a long also. All right. Now, AUD/USD is dropping like crazy. I'm just so annoyed because I knew AUD/USD was going to go for a short, but I decided I'm not going to do it for you, which is totally fine. All right. Now, going over to USD CAD now. USD CAD, I've been waiting for the price to take this weekly low for a long time. And we have a brilliant movement here where after this stop hunt here, weekly stop hunt, we had a distribution of liquidity. It looks as though the market decided to just take this low here and has continued to go for a long. It will come back. I'm not surprised that it's taken off like this, because there was a high amount of bullishness here in this weekly order block that I was telling you guys about. It's already actually closed above and filled one liquidity gap already, which is crazy. Let's see how far it goes. But I want to see at some point USD CAD pull back for us and give us a short and come back into this order block here. But let's see what we have over here. Now, for me, USD CAD going long wouldn't surprise me, because we have equal highs over here and we have a few more highs over here. Now, the reason I'm not marking these is because it looks as though the price is probably going to go for those already. But I want to see what happens when it gets over here and takes this high right here or these set of highs is another weekly high. Okay, maybe the price will reverse from there. But yeah, so this is USD CAD, and the strength of bullishness that is showing, depending on how it closes. Now, if it manages to get these highs before Friday or before the NFP news, then I will be a little bit weary of trying to go for a further long, because then the market has the room to just pull back the other way. Okay, that's the thing to pay attention to. All right, now with EuroCAD, what am I saying about EuroCAD? Well, EuroCAD has come back to the same supply order block for the 1, 2, 3. So we had 1, 2, 3 attempts, and then we've had the actual final part here. Now, what's interesting is that the wick actually did go above this area and actually came to this high right here. But if you check the body out, look at where the body open and closes are. They're still in the middle of this candle, so they're around the equilibrium price point. So if it was a deeper close, it might have been different, but because it's not, there's still room to see what the market is going to do. We have some gaps down here. Okay, it'll be very intriguing to see what the market does. Yeah. So now before I leave here, are there any pairs you guys would like me to look at before I go on this overview? Let me know. I'm trying to stick to focusing on the majors, but if you have another one I can quickly go through, then we could definitely take a look at it. Let me see. Okay. Well, it looks like UJ, yeah? All right, cool. I'm looking at UJ right now. All right, so let me take a look at UJ. Let's have a look here and see. All right, so USD JPY. Okay, I had a discussion with one of my academy students and a brilliant trader and a very lovely guy. I've known him for over 10 years. Fantastic, fantastic brother. I really like the guy. Now, we had a discussion about USD JPY, and I was saying that there's room that the price will probably go for a long, but it can also do a short. Now, it looks as though, I mean, on my chart here, I actually haven't seen this. This is the first time I'm opening the UJ in 2 days, but there's actually a liquidity gap at the beginning of the day. So we have a new open liquidity gap that the market has left, moved strongly away from it because there's a lot of supply liquidity. And now with this news has come back to it. Now, seeing USD JPY is making me think that we actually might have along with the fundamental news, extremely bullish day for the dollar. And just to point this out there, if there is an extreme bullish day and the price, for example, because you can see the price is moving very strongly long, if the body of the candle of any H4 candle closes above this high, then my next target is going to be this M15 liquidity gap area I was talking about. I just want to quickly show you it before I start with UJ really quick. So if I go back over here to the M15 here. So between this range here, to be more specific, and this range right here, this was a Thursday. I'll never forget it because it didn't shock me, but I was just interested to see what the price was doing here. The market left this another type of the USD JPY gap that we've just seen. It left a liquidity gap here that it never filled out. The price has moved away from 103 and has been operating in 102s and stuff for a very long time without filling this gap. So the NFP news might actually do it. Another thing that's important to know is that in the London open session, we have equal highs, but the market decided not to go for those at the moment because they wanted to push short or push lower, basically. So coming back to that now, just with that simple analysis here, that's the candle for the equal highs, and this is the supply order block and the liquidity gap. It would make sense for the dollar index to actually push further long. So we might actually have a long because it's so extreme right now, the way the bullishness has come in, that we might as well just suggest that we'll go along. Look at that, guys. You see why I told you it's always good to wait? But anyway, now that I've got that out the way, let's look at USD JPY. Now, I'm going to actually start off from the monthly because there's a few things I want to go through. Now, USD JPY is an obvious long. And when I go over to trading view, you will see why I'm saying that. Yeah. So on the monthly here, let me just grab this here. I'm going to grab this tool. Here we go. What we've got over here is the price has entered into this supply order block, right? And then what we need over here is to look at this demand order block, which the US dollar versus the Japanese yen is going to continue going long. And Japanese yen pairs in general usually trend long most of the time because Japan's economic infrastructure, 70% of their GDP comes from their exports. So a country that's high in exports needs to be competitive in the world market for exchange rate. So to do that, they have to purposely keep their currency as relatively weak as possible, not just weak for no reason, but relatively weak, okay? To compare with the likes of China, which does the same exact thing, where the Chinese yuan is purposely kept weak, even though there's a lot of value coming into China from business, but at the same time, it is a situation of keeping it weak to keep it lucrative for exchange, so that people who do drop shipping and buy Amazon products and sell it for 4 times the price can actually make that business model work. And it all works because of the economy in that sense. So looking at this anyway, on the monthly time frame, we're in this supply zone. I knew the price was going to go long as soon as it got in here, because we had unfulfilled efficiency of this demand order block here. The price filled it out and it gave us a pretty good long on the weekly time frame as a signal. And this is the initial long. I took a buy trade from here and I closed it maybe 300 pips after, back when the market first did it, into this order block. Because if I go to the weekly here, it entered right here into this weekly order block. Now, on the weekly, what I was discussing with Abs about, which was a pretty cool discussion, is that the fact that we have a fair market value gap here, in essence, bearish prices or sell prices or ask prices that we had were offered on one side, but not the bid on the other, in a sense. Even though there's always the ask and a bid. But in terms of on this order book, you wouldn't have been able to just buy. There was no buy prices offered. It was just sell. So at the moment, even though the range is closing up a bit, from this high right here, which is the previous week's high, to here, we have a fair value gap on the weekly time frame. Okay. So this fair value gap that we have needs to be filled out. When I go to the daily time frame over here, if I drag this area over here, we have a D1 supply zone. So this D1 supply zone that we have over here, I'm just going to use another color. Let's just pick a color that will work. I'm just going to go for slate gray. So this order block here is our daily order block, which is sitting right at the top or the upper edge of the fair value gap. So as soon as the price was, or if the price was to go into this area, it would close out this weekly fair value gap and then enter into a very strong area of supply. It will also fill out the liquidity void at the same time, which is a pretty powerful movement. Now, if we look at what the price has done today, all right, we had this situation over here where the price came back to. Now, this is where we teach validation points that although the fair value gap has been filled, the price has come back to this reference point high and done a spike here. So throughout the week, the price has kind of been ranging. Today, we had a spike down. By doing this spike, on lower time frames, it doesn't look like much. It just looks like normal price action. But when you go to the daily, what's actually happened is that the price has gone beneath every single low. Monday, Tuesday, Wednesday, every low has been run beneath again. If it hasn't been run before, it's been run again. So any sort of sell stops that were beneath here have been triggered and obviously brought to the wrong side of the market. Any stop losses have been run on the buying side of the market, and now it's actually started to go for a long. And my belief is that the price should really be reaching to fill this FVG and get into the supply order block, which will produce about 130 pips. Now on the H4, okay, we have this H4 order block here, which is where the price went into. And surprisingly enough, there's unfulfilled efficiency here. If I just draw a line here and zoom in one more time, notice that when the price was going for this long trend here, or bullish trend, it didn't return to this demand order block. Okay. And throughout, and this is last week we're talking about. Now, throughout the next week here, so let's drag this over here. Throughout the next week, notice that the market was making several lows, not necessarily lower lows all the time, because this was a statement low already. And then we had the price trading within this range, making lower lows. So it's not really lower lows or bearishness like that. Then we see this kind of rush down, which is pretty good. And the wick of the candle, notice what happened. These two candles, when the news came out, they wick directly into here. So they filled out an unfulfilled efficiency of an order block, which is the H4 demand zone order block. And at the same time has pushed the price along, which resultantly will do what? Fill out this gap right here. So this is what we have exactly going on in terms of price action here. And now in terms of moving forward from here, what we need the price to do is get up to here. Now, because there's an obvious gap that needs to be filled, I'm not surprised that the market is doing that. Another thing that's pretty clear is that if you see here, now I've trained my eyes over the years to see these things, but we have relative equal highs. I mean, these highs are visually far apart, but the highs I'm talking about are these two locked together. And if you notice, we have the same pattern of how the highs are. We have a lower high, then a higher one, then price goes short. And we have a lower high, and then the last candle of yesterday is a higher high than the previous one, and then the price goes short. So we have this kind of pattern of making a so-called higher high, but then taking the price the other way. And what that is literally what we call divergence. Okay. I don't even need to use any indicators to see that. So my expectation is really with USD JPY is that it should take these highs here. And there's two sides to the story. Okay. And obviously the NFP news counts. If the price takes these highs and just closes with a H1 candle, then we should be looking for a long that should ride us all the way up into this area here, which would be a very good long. Now, if the NFP so choose to give us an entry, and this is my second scenario for the person who asked, what I would say is when the price pulls back down here, if it was to, let's say not when, if the market took these highs and then the NFP news brought the price down, then we might have a second chance if we're very, very lucky where the market may come back to this order block here. Because obviously on this buy side of things at the moment, there is a liquidity void, at least from this range to this range here, where there was no buy prices offered. And that's obviously going to happen when there is news, especially high impact news. So as a second scenario, all right, this is scenario number 2. If we were so lucky, let me type this in, then we could get a return to this order block here. So scenario 2, I'll write it out. Scenario 2. Yeah, scenario 2, we'll call it, okay, return to supply OB. So change that into 8, just put that as red. All right. So this is scenario number 2. Okay, the red doesn't really look good over the gray. So let's try it. I'm gonna use the pink one, deep pink. Okay, that doesn't work either. All right, so let's go for this magenta. All right. So yeah, so this will be scenario number 2 over here. Let's put this supply order block here. So yeah, here we go. That looks better now. So this order block here that the price is left behind as it's gone long. If the market, if we're lucky, then scenario 2 will play out and the price will take these highs. All right. The highest high being the high of the day and fill this liquidity gap right here. Right. And then from here, go for a long. Scenario number 2 would be a continuation trade, which all I'll do is I'll draw a line here. Imagine this to be the close above, and then we keep on going towards the FVG. Now I'm going to say towards weekly FVG, towards weekly FVG, which is going to be, let's get the price point on this. So the upper bound of the weekly FVG, because this is already the bottom part, would be here. So 145,504. All right. Pretty round number as well. So 145. So literally 145.5, which even as a psychological term, you can see that that's a very pre-planned number. And that would be a great target for, moving forward. 145,500. Yeah. So this is my 2 scenarios that I believe should happen. All right. Either the price will give us that pullback tomorrow after taking these highs here, then we can all ride the long wave from here until the FVG, or the price will just blast up to the FVG itself. Now, knowing the news and knowing the markets, that they'll always want to try to be tricky with us. So, they may decide to kind of halt the price moving any further, pull back down, and then go long. Maybe even take the lows and do a double stop on, as I call it, double assassination attempt. Those are the kind of options that we have going forward. All right. So this is kind of like my layouts. I hope that helps. Was that okay? Whoever asked here for you, Jay? Let me know if that made sense. Yeah. Now I think there is a little bit of a delay. So if I said ask the question, then I'm guessing it's gonna say it probably like a minute after me or something. I'm still trying to figure out how to get it to work. Okay, I see a love heart being sent. So that means they love the analysis. Okay, well, for now, that's great. Thank you. I see all the different emojis. I didn't even know you can do that. All right, well, it was lovely to be on, guys. We'll be on tomorrow. I think I might cover the NFPs actually live. I'm gonna go live for the NFPs. All right, so I'll be live with my students and live with you guys, my global students at the same time. And we'll until next time, everybody take care and have a great day, guys.